I got some interesting action I want to share with you. It's a trade that we talked about, a stock that we talked about 9 days ago, and we're seeing more activity positioning for a continued move higher for a big breakout here. But one of the things I wanted to share with you is there's three main aspects to being successful in the financial markets or with trading. There's always a thesis, trade structure, and managing risk. Those three things. So what we're going to look at today is the thesis and also then looking at the trade structure using a stock and also options. So let's take a look here. And MUX is a stock that we talked about, as I said, 9 days ago. You can check it out in this video here. I talked about the next silver short squeeze. It's interesting to see what the activity that came in this late in the afternoon here. Now, I'm just going to pop over to the activity here. November, right here, November, and they came in at the two strike. Now, this is not the first time I've talked about this activity or the first time I've seen it. Why is this time different? Well, the other times are looking to the other times, I didn't really think that there was any teeth to the bite there. So what I'm looking at right here is a little bit more strategic, a little bit more strategy, and a little bit more strategic. And even though that this is a lot of volume here, when you do the premium, they came in at 15 cents, 15 times 60,000 or 60,000 contracts times $15. It's premium wise, it's not much, but overall volume, when you look at the volume, especially today. So even though this traded nearly 13 million shares, it's a $1.65 penny stock. So that's why you can't always look at everything the same. You can't compare an Apple to this. You have to compare it to itself and understand why it's relevant or irrelevant. So this to me is relevant. It's relevant on the fact of what they're looking at here, what they're positioning for. And this is a hard to borrow stock. It is in the silver mining space. And you can make the thesis for more inflation and follow along where these kind of stocks will outperform the metal that it's compared to. So silver, gold, and so forth. The miners will always outperform typically. So on MUX here, they're coming in, they're buying at 15 cents in November. Some of the other activity that I saw a couple days ago, so overall bullish for the last 10 days, very bullish. And some of the activity that I saw previously was some selling here, not in today, previous days that they were coming in, selling some of the puts, selling at the dollar strike, selling at the $1.50 strike. So that doesn't necessarily mean it's all out bullish, but now we're seeing some positioning on the put side where they're selling some puts, and then also at the same time call side here. So the two ways that I would look at this, it's no different than what I talked about in the video previously, but here we are, we're knocking on heaven's door here, and it did get a pullback from that 11th, or from the first here, got a pullback, and then it snaps right back up. So this is why it's important. When we talk about video, or when I share ideas like this, you create a watch list, or no matter who you watch, create a watch list, create things. Typically, people are going to talk about what is meaningful. I'm not going to get on the camera here and say, hey, this is not meaningful because I'm not going to waste my time, nor I'm going to waste your time. So things that I talk about specifically are what is meaningful. So you can create a watch list, and that's the best way to approach it, and keep an eye on it. There's thousands of stocks. What's meaningful? Where's money going to? That's always the first aspect to it. So when we go to MUX here, I'm not going to, well, we'll just take a look here at the 5-year weekly. As I said, the base here, start to build a base, and we can see it go to the moon, right? To the moon. Alrighty, back to the daily here. Oh, 10-day, 4-day, doesn't matter. Okay, so two ways, well, actually it does matter, because the one way that I would look at this is if you have a decent amount of capital, and I mean decent amount, I mean you don't have to have, $100,000, but I mean enough where a position size is not dominating your overall book. I mean, you own the stock here. Own the stock and you play the stock. It's much more cleaner. Stock is up 10% from where I discussed the video, or when I discussed this. And if you were lucky to get it at $1.40, it is up, I think, about 20%. Yeah, 20% here. So, relative terms, this is what's meaningful in how to build wealth and build success trading options as a little guy. It's not about the Apples. It's not about the Netflix. This is the way. This is the edge. I'm trying to help you find that edge. This is that edge for the little guy. It's getting gains like this, stacking them, chipping away, building, building, building. Building wins, stacking the wins, and getting gains like this. So anyways, where do I think MUX goes? I mean, we've seen a lot of the meme stocks. I haven't seen too much talk about this. I looked on Swaggy Stocks. Hasn't been really talked about on the Reddit forum. So I'm not sure if this is positioning for somebody to run some chatter. This is what we typically see run some chatter, and MUX spikes on this, and this position that we see today shoots up in value. So that's one way, is to play the stock. Much cleaner, but you also have to be nimble. You got to sell into it. You can't hold this. You get the big moves like what we saw here back in January from 98 cents all the way up to $1.61. You got to take that. You have to manage it. You can't hold on. It's not a game stock. This is not going to be a game stock. It's not going to be an AMC. It could go to the moon, but it's going to crash pretty fast as well. So, and what I mean to the moon relative, what a moon would be for MUX, not the moon comparison to what GME was or AMC. To the moon is relative to what the underlying is. So MUX here, the other way I would look at it, it's interesting. Not necessarily go with November because, again, I said that came in at 15 cents. It's up a little bit here. It has 162 days. If you want to sit pretty, not worry too much about it, and kind of see where it plays out, you could look to do a buy the 2 and sell the 3 in January. 225 days. Goes for 15 cents. I didn't get, it wasn't filled there, but I mean, that's kind of the mid-market, 15 cents there. You risk 15, you have a max profit opportunity of 85 cents. And at that point, you do hope it goes to the moon to be able to close out that spread or to get it on there. But over time, if this was a position that just worked out as well, just saying that if you had a thesis, again, looking at different theses. Now, one thesis doesn't mean it has to be the main thesis. You can have different ones. You could have this wild card thesis that it's going to go to the moon, and you can have the other one saying, hey, Josh makes sense when he says that possibly silver and metal, which is cyclical, same time last year, those moved and rocketed higher. These miners could profit as well. So it may not be that big spike, but an overall trend higher. And this would benefit as well because it still has a 225 days. So those two trades, a thesis, how to manage them, take profits. You manage these differently. The stock, you're going to be trading much differently than this one. You can have a little bit more patience on the January. But that's where it comes down to managing risk. So that's what I have for you today. We'll see you in the next video.